What is an IPO and how does it work? Meet Ajay. He owns a medium-sized company in Mumbai. To expand his business outside Mumbai, Ajay would need rupees 1 crore. To raise this amount, Ajay decided to sell a part of his business to the public by issuing shares through an IPO. When a company issues shares to the public for the first time, it is done through an IPO or initial public offering. Ajay decided to sell 10% of his 10 crore company by issuing 1 lakh shares priced at rupees 100 each. These shares were then listed on a stock exchange for the public to buy. In time, Ajay's business flourished and the share prices of the company increased. The investors who bought his shares through the IPO sold their shares at a higher price and made great profit. You can buy shares of an IPO